Welcome to the February 24th, 2025 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. Whoa, what could cause the next recession, right? What would cause the next recession? What would it look like? And how would the markets react? I'm going to give you some possible outcomes based upon a very similar scenario down in Argentina. So here's where we are. You've heard a lot about the 36 trillion in debt. That'll round to 37 trillion shortly. And everybody says, wow, that's a lot, right? And you've got a $30 trillion economy currently. That's up here, and you can see this at usdebtclock.org. It's one of the greatest tools. And tariffs. We get $73 billion a year in tariffs, right? Excise taxes, $104 billion, and you add all that up, the government brings in $5 trillion. And what happens to the $5 trillion? Well, they borrow another $2 trillion, which makes the debt bomb even bigger. Now that could be the next recession, but I'm going to give you a little bit different outcome potentially in the financial markets based upon Argentina and based upon the United States in the 1980s. All right, DOGE, Department of Government Efficiency. The DOGE clock says these are the spending cuts that they've identified already. We're only a month into the Department of Government Efficiency. They've identified $113 billion and rising in savings. Matter of fact, they think they can cut $1 trillion in waste from the U.S. government by 2026. Well, that's a little over, that's a year from now. Wow, how would they do it? Well, they're adding it up, and you can go to their website and find it. But be careful what you wish for. I'm going to give you a very important calculation here, and it has to do with the official definition of the dreaded recession, right? Because people tend to think, oh, the market's going to crash and it's going to be horrible because we're in recession. And sometimes, yes, right, that's a consistent pattern. The equity markets react very strongly to a contraction in economic activity, which is gross domestic product. Here's your formula, all right? You got GDP equals consumption plus business investments plus government spending. Wow, and the government, they've been spending a lot. They've been borrowing money and spending it, pushing it into the economy. And net exports. Right now, there's a trade deficit. You may have heard about that too. But let's look at the G number. 30 trillion economy. $1 trillion the government finds in cost savings. That means that the economy would contract by 3.3% if these others remain the same. Whoa! What's the current economic growth rate? Well, this week the Atlanta Fed says it's 2.3%. Well, you go 3.3 minus, add back the 2.3, you got minus 1%. You do it for 2 quarters. That's the official definition of a recession. Run in circles, scream and shout. But what happened in Argentina? Here's the parallel. All right, I'm going to get you your answer because, whoa, baby, Javier Milei, go Javier. What did Javier do? He cut spending, government spending by 30%, right? By the way, I'm Spencer McGowan, President, McGowanGroup Wealth Management, and you're a financial weatherman with your financial lessons each and every week and special updates when there's a raging market activity, and we cover it all right here. So be sure to subscribe, like it, and share it if you'd like. And we're going to take this definition, and I just said we could cause a recession. Well, that's what happened in Argentina. Go Javier. Il Loco goes down, cuts government spending by 30%. deregulates in a massive way. They had stupid regulations. You even had packaging rules on a watermelon, for Christ's sake. I mean, God makes a watermelon with its own packaging, but they had another rule on top of that. So they cut stupid rules, and deregulation led to productivity. Inflation plummeted, very similar to the 80s. By the way, I posted a great 80s video that covers this too, about Reagan, what happened during the 1980s. 5 shocking lessons from that is already posted. Let's go back to Argentina. Whoa, baby, here's what happened in Argentina. All right, Il Loco gets elected right about here, okay? Boom. It was December, you can see the little spike here, and that index was about 50 at the low point after his election. He takes office, cuts government spending. What happened to the Argentinian economy? A net contraction of 2.4%. It was a modest contraction compared to what it could have been, but the deregulation raised productivity. How did the market react? Whoa, as he's doing it, there was a big celebration, right? Il Loco's success. What happened here? Whoa, that's about a 25% correction in their equity market when they realized what? We're in a recession. Oh my God, run in circles, scream and shout. Then what happened? Productivity, deregulation, less unproductive government spending led to a big old rally. Now the market stayed above where it was when he got elected, but look at this. That means that this index has essentially doubled since Javier took office, caused a recession, and the International Monetary Fund, and they're no fan of conservatives, they actually said Argentina's economy right now is set to grow at 5% this year. The last time the U.S. economy grew at 6%, that's in my 1980s video, you might want to watch that too, because the last time the U.S. economy grew at 6% for a full year was 1984. Now let's come back to the current markets. Dow Jones Industrial has been stuck around 44,500 for the big part of February, and that's okay because that's a gain of about 4%, or about 5% year to date if you add in the dividends. Wow, who's performed the best over the past year? The 2 top names are Texas. Wow, Vistacorp, that is North Texas power provider and other regions, up 270%. Unheard of for a utility. Everybody's excited about AI, data center power demand, and boy howdy, they woke up, but they've also delivered in profits. Texas Pacific Land, that's nearly 1 million acres that came from the Texas Pacific Railroad bankruptcy back in the 1800s. They couldn't pay their bills, so all of the debt holders got the equity in the million shares, and now they're starting to run it as a good company. Not a recommendation for your portfolio, not without price risk, but not a recommendation until you come down and get a plan from McGowanGroup Wealth Management, because that'll help you upgrade your plan with a team of 10, a team that really cares. Constellation Energy, 150%. 3M woke up. What a turnaround. 95% over the course of a year. Targa Resources, that's energy infrastructure, 115%. On the ugly list, nobody wants the Moderna vaccine. This surprised me. Irving-based Celanese, a huge chemical giant, down 54%, a big part of it this year. The CEO resigned in December. The investment committee is going to revisit that one and see, is it a bargain at some point? But anyway, those are they make up the bottom here. Walgreens down 50%. Their turnaround did not go well. Thank you for tuning in. Go to networthradio.com. You can contact the team and I right there. Send us a message and also set your time for a brainstorming session, or come down and meet the whole team here at the Crescent in Dallas. We love to serve affluent families. We're really good at coordinating your estate plan with your estate planning attorney and helping your CPA with the taxes. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.